So there were just under 28,000 new homes built in New Zealand last year, and that's the highest number since 2017. So we are seeing the trend of increased building activity now result in more new homes being finished across the country. So yes, although there was a drop in net migration for New Zealand and in Auckland, importantly for the first time in years, what we saw last year was that correlation between the cost of mortgage finance and net migration was almost a wee bit broken. So by that, the demand for property still increased, and we saw that the market was almost, the FOMO effect at play was more focused on securing the asset than the price that they actually were willing to pay for it. So in a more normal market condition, the negotiation or price you'll pay for an asset becomes your priority one. In a hype market like we saw with interest rates so low, securing the asset became priority number one for many buyers. This year we've seen supply start off a wee bit slower than last year. Just under 7,000 homes have been completed so far, so a wee bit below what you would expect based on the last 5 years worth of data. What we can read into that is that we are now beginning to see the capacity constraints that are impacting the building sector, both in labour and material shortages. What we expect is to see that trend continue throughout the year. So we would expect that this year there'll be less homes completed than there was last year. So we're seeing some really reassuring signs when it comes to building activity in New Zealand. So for the first time in many years, we've seen a shift away from just building for the sake of building, so focus on just numbers of consents or completed dwellings alone, and more of a shift towards what are we building and where are we building it. So simply building McMansions won't help fix the housing crisis. We need to focus on building the right properties at the right price brackets in the right locations. So what we have seen reassuringly is in markets like Auckland, our biggest economic market, we've seen townhouses become the dominant new build being constructed now, which are focused on the lower price brackets within the city, which is where first home buyers would be looking for a new build. So really reassuring signs, and we hope to see that trend continue for the next few years. So those that purchase late in the cycle, so in the last 6 months, may have paid a premium to secure the asset. What that means when you get values softening as a result is that those people may have to hold their asset for longer to realise the capital growth. So for those that were purchasing with a short-term mindset, they may have to really change their purchase profile now. For those that were buying for the longer term though, it doesn't really mean much, because if the values do come back a bit and you don't have to sell, the impact to you is relatively low. However, it is fair to say we saw some premiums in purchase prices being paid in the height of that FOMO effect. What that means in the coming years, time will tell.